Hello, everybody. Steve Griffiths here, developer of the MT Predictor software program. If you could all let me know whether you can see the chart behind and the risk disclaimer in the front, so I can know you can see and hear me. Right. All examples in this training room should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and do and will unfold. It doesn't matter what trading approach you take, there always will be losing trades, and it's important to understand that. Right, let's get started. This morning, I want to have a look using our new MT Predictor scripts on TradingView again. Quite excited about these, and it's been quite a good uptake in the last week. So I know a few of you new customers are coming in and using these. For your current customers who've been with us for a while and are using our standalone version, which is this version, or our NinjaTrader 8 add-ons, the approach we take is exactly the same. So it doesn't matter whether you're using our TradingView scripts, NinjaTrader add-ons, or whether you're using our standalone, exactly the same approach you take. Yes, Mark, it's the TradingView scripts definitely has sparked a lot of interest. It's quite nice actually having charts in a browser window. It means that you can use them on any computer, you can use them on your tablet, you can even use MT Predictor on your phone now, which is quite nice having, you're out walking the dog and what have you, you have the MT Predictor there as well. What I also like about the TradingView is the alerts. The alerts we've got here is really easy to add in, and basically because these are server side, what that means is they're basically running on the TradingView servers. It doesn't matter what charts you're looking at here, or whether you've got TradingView open, or whether you've got it closed, or whatever, or you can put your PC off totally. You can have these alerts here set up, and if I just open, say this one, you can actually get you to send an email to you as well if you want. So they're running in the background when your PC is off. So it's actually quite nice if you did want to have, if you're following slightly longer term charts, for example on Forex, etc. You can have these alerts there set up and running. When MT Predictor or TradingView is closed totally. So that's quite a nice little feature of TradingView to have the alerts like that. That's quite it's quite slick. The only issue on that is when you click on alert, like I just did, it thinks you want to look at it, so it changes the current chart to that market and that time frame. So I want to go back to the YM. So I'll go back to the YM, and I want to. Well, I was going to start on the 3 minute here, because what I want to do is I want to have a look at some of these VS setups or volume spike setups that unfolded this morning, just to go over basically the volume spike setup again in MT Predictor. Philippe, yes, if you're a current customer, we do a discount on the subscription, but drop me an email, steve@mtpredictor.com, and I'll be able to send you some information on that if you wanted. But no, I wanted to go over the VS setup in our add-ons, because I haven't looked at the VS setup for a while. We had a look at the W3 or Wave 3 trade setup, was it last week or the week before? So I wanted to go over the VS setup. Right, if you're new to MT Predictor, what MT Predictor is not a black box system. So you can see we have automatic setups on our chart. You can see we have an MTP trend color down here, blue for up, gray for in the process of making reversal, and red for down. You don't just take the setups blindly as if it's a mechanical system. That is not what MT Predictor is about. The reason it's not about like that is because markets are random half the time. A lot of traders don't seem to understand this. Basically, half the time markets are not in a clear pattern. It's very difficult to discern what they're doing. They're basically chopping up and down. They're going sideways. They're basically in a position where you shouldn't be doing any kind of trading. And that happens about half the time, maybe even slightly more. So the trick to trading is not trying to have a mechanical system that works 100% of the time, is not trying to trade everything, is only trying to trade when the setups are clear. So in other words, these setups on here are not to be taken. They're basically there for advisory. That's the best way to think of it. So how do we know whether to consider them or not? Well, for this, we go to the higher time frame chart. If you're on a 3-minute chart, you can go out to the 15-minute. If you're on a daily, you go out to the weekly. If you're, say, on an hourly, you go out to the 4-hourly. You're looking for a time frame between 3 and 5 time frames higher. So what do we do? I'm just going to use the replay mode here in TradingView and go back a little bit in time. What we're looking to do is we're looking to project our DP support or resistance zones out on the chart in the future. You can see here we had a move down. The market was starting to go back up. If I go forward a bit, can you see how it's starting to go back up? So as it's going back up, we're now looking for potential resistance areas. For you, those of you who've been with us for a while, you'll know that when the market is going up like this, off a low, we're looking for the last swing into the high or low. So do you see that? That's the last swing down there, isn't it? That's the last swing into that low. So we're looking to project a DP off that. So here, let's double click on the script. With TradingView, we can't click on the chart as we can in our NinjaTrader and standalone. We have to do everything by reloading a script, but this is quite easy because what we're looking to do here is we're basically looking to place a DP off that pivot, which is one pivot back. So this is the last pivot, which is pivot 0. That's one pivot back. So in here, I'm going to select pivots back. I'm going to select one pivot back there. I'm then just going to tick the script, and there it is, it draws it for you. You can see quite easy indeed, really. Can you see how that's on the chart in advance? See, that is before the market even gets there. So you're preparing. You're basically, it's like fishing. You're going out there. You're sticking the rod in the water. You're saying, if the market gets to a level that I project, then we have a look to see what it's doing. In other words, we are anticipating and then seeing if it's doing what we anticipate. If it is, we deem the picture's then going to be clear. To keep that DP on the chart, as we change time frames, I'm going to go up to the drawing tools here, and I'm just going to draw a rectangle around that. In TradingView, we can't keep the DP on the chart as we change time frames like we do in our standalone. So what we do is we mimic that by drawing a rectangle around that level. And then I'm just going to, well, I might actually put some text in there just so we know what it is. And then I'm going to lock it. You see that little padlock there? I'm going to lock it. So what that means is I can't change it. So if I accidentally hit it when I'm trying to scroll the chart, it means it won't move. So it stays on that position. I'm now going to turn the DP script off because I don't want it to recalculate when I go back down to the 3-minute chart. But you see how at this point in time, what we're doing is we are projecting a level in advance. In other words, we're saying if the market gets up to there, not that it will, but if, then we have a look to see if there's anything going on at that time. Just turn trading mode off. Yep, want to get out of that. And you can see that's exactly what it did. It went up to that level and reversed. So when we come down to the 3-minute chart, what we do is then look what's happening when it gets to that level. And sure enough, can you see what happened there? We had a VS trade setup. So what's a VS trade setup? Well, I'm just going to use the replay again. I'm just going to come back just to around that high. Right, now with TradingView scripts, I have to go forward one more bar. The reason being is because these calculate when the bar closes, i.e. of the first tick of the next bar. So in training mode, we haven't had the first tick of the next bar. So it may look a little bit odd if I go forward one bar, you see, but you have to do that to trigger it in training mode. So in reality, when you're actually doing this for real, as soon as the first tick of the new bar prints, then it will calculate on the close of the previous bar. So, you know, we're not calculating this one bar late. It's only just a quirk of using the replay in in TradingView. So as long as you understand that, that will actually print at that time. If you want to just, if I want to clarify that, if I use our trading mode in our standalone version, you know, that's what it would look like at the time. Do you see that? So we'd have the VS print as that bar closes, i.e. the first tick of the next bar. So just as long as you're happy with that. So what are we looking for? Well, we're looking for a bar that goes through. Perhaps I'll just change the cursor here. This bar here that I've got my cursor over, can you see this is a wide range bar and it goes through a previous high. Do you see that? This high here, where I've got my cursor, this previous high. So this bar goes through it. We have high volume, as you can see down here. So what normally happens is when people see the market make a wide range bar through a previous important high or low, on the volume increasing, most amateur traders would look at this and say, that looks like buying. It looks like a breakout to new highs, i.e. a breakout trade, therefore I want to get long. Seems obvious really, doesn't it? Market breaking out above a previous high on high volume, it looks like it's going to be there buying and you want to go long. However, we have got this resistance level on our chart. We know in advance that we need to be wary to see what the market is doing at this level. This is an area where professional traders will look to reverse the market. So what we do is not look at the bar that breaks through it, i.e. the bar I've got the cursor over. We look to the next bar, the bar afterwards, and we look to see and say, is the market breaking through? In other words, is it still carrying on up and higher, i.e. is the volume pushing it higher? Or as in this case, it's now made a red MT predictor sell bar. In other words, the market has failed to follow through. Do we all see that? This bar, it went through the previous high there. The next bar, it failed to follow through. This is important because if the market volume on the previous bar was indeed buying in this case, then the bar afterwards would have carried on higher. But because it didn't, it means that the market volume on the previous bar was actually selling, believe it or not. It was the professionals selling to the amateurs. In other words, it's what's called a fake out, a classic fake out. We have the advantage at MT Predictor in that we don't just see this as a fake out. We know that the fake out is happening at a level where we've anticipated in advance that the market may make a reversal. Do you see how important that is? Do you see how important it is being ready to look for this potential failure before the market even gets there? That's what the VS setup is. It's a volume spike on a failure to follow through. So now we can place the analysis on the chart. A VS is an advanced trade setup. So I go into the advanced trade setup scripts, and this is the last pivot going up. So what I can do is I can then do the analysis on the last pivot. Click on that. This analysis is on the pivot high. Do you see there the pivot high? So you can actually do the bar offset as 0. If this was a trade setup 1 bar afterwards, there's an example here, but if it was 1 bar after the high, i.e. the trade setup on this next bar, so if I move this forward one bar afterwards, can you see how it will recalculate 1 bar after the pivot high? Sometimes you get a reversal, MT Predictor reversal 1 bar after the high, so that means you can offset it by 1 bar, but in this case it was actually the bar of the high. So this is now a potential trade setup where we have our position sizing taken care of. In other words, we risk less than 2% of a sample $20,000 account. You can change the size here to whatever account you want. In other words, this is our initial risk. Our target is down here at plus 7.7R. This is calculated for you. In our standalone version, if I do the analysis on, you can see it actually gives us your DP target at that same level. So it gives you the target to go to. We can't quite do that in our TradingView scripts because TradingView restricts us for server usage. So there's a certain amount of things we just can't do. That's why we had to split our setups between our normal trade setups and our advanced trade setups. It just means that it just keeps the load down on the server. Maybe we'll have, as time goes on, we might, as the Pine script language develops and gets better, we might be able to do more, and then we might be able to put our DP targets or our WPT targets in the script here. But what we do have is we do have the ability to, on the target mode here, do you see this? It gives us the ability to say the trade setup target. So that's the default. So in other words, that will give you the target. It will come to the level of where your target is. You can also do this at an R multiple. If you have a 2.5 or whatever R multiple you wish, or you can put in a set price for that target to be as well. But we want it initially just to be at the trade setup level, but it calculates that for you. For you guys who've been with MT Predictor for a while will notice the DP from the opposing low down there. But this is the beauty of the VS setup, is just like our wave 3 trade setup, is that when the market goes with you, it probably goes with you quite quickly and quite a long way. So the trade setup is where potential profit is much larger than your initial risk or your losses when you go wrong. This is the whole key to successful trading, is to, when the losses come through, which they will, you always will have losing trades no matter what trading approach you take. But when the losses come through, the losses are kept small. When the profits come through, the profits are large, not just in dollars, but in risk reward units. In other words, multiples of your initial risk or your losses. If I turn trading mode off, go back to real-time data, trade script recalculated there. So what I want to do now is I want to go back and put it back on again. If you want to put it onto previous bars, we have a way to show the pivot labels. So here I'm going to calculate the pivot labels. So that was pivot 309. Do you see that 308? Pivot 309. So what I can do in here is I can take it up to pivot 309, which is there, and then say to do a pivot number, and then do OK. So it actually does calculate off that pivot number, that's fixed. So that way you can then, rather than the last bar, you can then go back and display off a previous pivot. But as you can see, this is what the market did. It did go down to that level, have a little bit of wiggle in between. Just can turn those display pivots off so it clears up a bit. But the market did indeed do what we wanted to do. It went with us to where a profit of approximately 7.5 times the initial risk was available. But you all understand what a VS setup is designed to do. And if we look back, there was actually some lovely ones earlier in the day. There was another VS buy here. Do you see this one? Where the market made a failure to follow down below this low here. Do you see that? It went down, it snapped back again. So that would have been a profitable trade. It also made another VS sell a bit earlier in the day here. And this is what I did a video of and put on the main website a bit earlier. Little was I to know that it did 2 great setups after that. So this one was a failure to go above that high. And that one was actually a failure to go above that high. So it's actually quite nice. Not all VS setups all work out. You can see that one there didn't. That didn't go with you. So not all setups do unfold as you wish. And I think actually this one here, can you see there was a little green triangle there? That's our history triangles. So if you wanted to analyze these, you'd have to use the trading mode or the bar replay to go back to that bar. Then you can do the analysis on it to see what it did. So, we don't hide anything in MT Predictor. If there was a setup that unfolded at the time and our pivots went through it afterwards, there's a little history triangle like you can see there placed on the chart. So it allows you to use bar replay to go back to that point to then see what the setup was at the time. But the reason I wanted to go through this was just to show you and remind you exactly what a VS setup is. So it's where you get a high volume spike on a wide range bar that goes through a previous important psychological high or low. You want to think like amateur traders. You want to look as if they're trying to make a breakout to new highs or lows. It then fails to follow through the very next bar at our DP support or resistance. In other words, it's failing to follow through. We then look to have a trade in the opposite direction. because this is the professional money coming in here. So the professionals are faking out the amateurs. The professionals in this case are looking to get short. Down here, they're looking to get long. Back here, they're looking to get short, but they're faking it out in the opposite direction. So when a fake out happens like this, it very often moves with you very quickly. You can see here it moved with you quickly. There it moved with you quickly. There it kept up going with you quite nicely. So the VS setup tends to go with you quite quickly. So that's why it's one of my favorite trade setups, because it's a setup that tends to go with the professional money. And when it works out, they don't all work out, of course they don't, but when it does, it tends to go with you quite quickly. And you can get VS setups on all markets and all time frames. I just saw this one this morning, so I just wanted to go over this one just to show you the theory behind it, just remind you all about exactly what the VS setup is. So again, exactly the same setup if you're in our standalone version. There it is, on the standalone version, and our NinjaTrader 8 add-on. So exactly the same setup, exactly the same approach, whether you're using NinjaTrader, TradingView, or our standalone version. So are there any questions on the VS setup? And perhaps from anyone who's new to our TradingView add-ons, are there any questions on using our TradingView add-ons while we've got me here at the moment? So any questions on the VS setup, or indeed using the TradingView add-ons at the moment? Yeah, Sylvian, you're dead right. It could be some algorithms designed to catch the breakout. TJ, it's up to you how quickly you want to come out of a VS setup. Ideally, it should go with you fairly quickly. That's all I can say. I don't have a hard and fast a guideline until when you should come out. I mean, we've seen in the past, if you had a VS setup, it's been chopping sideways, well, then that's not what a VS setup is designed to do. So if it chops sideways, then you really want to be bailing out. Raviar, TradingView doesn't have a scanner. That's the one thing that I think everyone's been crying out for years, to try and have a scanner. But what it does have, as I said earlier, is these alerts. So what you can do is you can set up an alert like this, and because they're server-side alerts, they will keep running no matter what time frame or what chart you've got here, or whether you've got this open or closed. They run on the TradingView servers in the background without you having to have any charts running there. So in reality, they can be used like a scanner. Depending on what package you've got from TradingView will determine on how many alerts you can actually have. So if I can find the one on the YM, that's the one on the YM 3 minute. See here, there it is. I've got it set up to trigger only once per bar, which is what you want to do because we want to be on bar close, and to show a pop-up when the trade setup comes through. But you can get it to send you an email. You can get it to send you an SMS if you wish. So there's lots of different things you can do when a trade setup appears. So effectively having the alerts like this in TradingView is probably the closest you can get to having a scanner. It's quite nice because they can just run in the background. I haven't got those turned on at the moment because obviously when I'm training, I don't want alerts popping up when I'm actually doing training. But yeah, on TradingView, it's very nice because everything's server side. So there's no software to install. There's nothing like that. Everything runs on the TradingView servers, and all you have here is just a browser window. So I've just got another browser window open there on the NQ. See a lovely TS3 W3 trade setup. I'll just hide the normal setups. There you go. A Wave 3 trade setup going down there. It was a lovely one, and a lovely one there earlier as well. And on the ES, a different browser window. Exactly the same thing there. There was our VS cell again on the ES. Right, looks like you're all quite happy on what the VS setup is and how that unfolds. So again, if there are any questions, do drop me an email, steve@mtpredict.com. so we can go over those next week. But I did want to cover the VS setup again in more detail, just because I like to go through our main setups, quite regularly, just to remind you all exactly what they are. And just remind you, my two favorite setups in MT Predictor are the Wave 3 W3 trade setup, because that has the highest profit potential for the smallest initial risk, and the VS setup, because that gets you in the direction of the professional money. TJ, you can have it on whatever TradingView package you wish. There's not any specific TradingView package that needs this to run. The only limitation with the cheaper packages in TradingView is, for example, their free one, you can only run 3 scripts. So here we have 8 scripts available to have on your charts. I don't have all of them. It's like here I haven't got the Elliott Wave one or the WPT one. I haven't got those on running on here because I don't tend to use them much myself. So that's the only probably restriction you'd want to look at, is how many scripts you can actually use depending on what TradingView package you actually subscribing to if you're using TradingView. Right, are there any questions on anything we have, anything else? The VS setup was the main thing I wanted to go through and take a look at today, which I've covered quite nicely. It seems that most of you are quite happy on the VS setup. So are there any questions on anything you guys, particularly for you guys who are new to MT Predictor, any questions you'd like to ask on usage or trade setups or anything really? This is what these webinars are designed to do, is to allow you guys to ask questions and as such be able to get the most out of MT Predictor. Oh, glad you all like that. Yeah, Mark, if you wanted to obviously learn more about the different setups, in the member section of the website, these webinars are recorded. So there are a number of previous webinars in there, and I tend to keep the ones that I highlight that cover specific setups. For example, this one will be kept for quite a while because it covers the VS setup again. I think last week's we'll keep because it covered the Wave 3 trade setup. There are also quite a few others that cover exactly which pivots to use for doing your higher time frame DPs. So if you go out to the higher time frame chart, which pivots to use. You don't just use every pivot going back. You have to decide which pivot to use. The golden rule is when you're making a new high or low, it's the last swing into the high or low. So for example, here, as the market's gone down, this is a new swing low here. As the market's going up, you take the last swing into that low, i.e. that pivot there. That's when you do the DP on from resistance. If the market is starting to go with you, in other words, as it's starting to go down like this, you then take the DP off the latest swing high or low to then find support in the direction that the market's going. In this case, you can see here the YM made the low at the maximum DP. We don't talk about the maximum very often, because as it says, it's the maximum area where you get support or resistance. The typical, which is this one, is where the market mostly finds the support and resistance. But this is probably a good example here on the YM as it went down, is if you go beyond the typical, then the next area of the support and resistance is the maximum area, which you have down here. So when I go back down to the 3-minute chart, you can see how, that nailed the low there quite nicely with the YM. Then if a market goes back and exceeds the previous high or low, you then go back to the next significant high or low before that. So that's covered in quite a lot of detail in the webinar where we went through exactly which pivots to choose. So that's recorded in the member section of the website. So I'm not going to go into great detail about that, but just point you to that webinar to look. Yeah, Dan, the maximum DP we added basically a few months ago, where it is basically the level at which the market tends to reverse if it goes through the typical. So the typical, which is the light blue one in this case, is, as the name suggests, is typically where the markets will find support or resistance. So for example, that will reverse at the typical. That one there reversed at the typical. That one there reversed at the typical. So you can see most of the time, the typical will be the area of where you get the reversals. But sometimes you'll get a situation like we have here, where the market has gone through the typical. If that happens, which it doesn't happen very often, but it's sort of more of an outlier. So if that happens, then the area you tend to get support or resistance is at the maximum, i.e. this one. If you are in TradingView, you can place these on. I'll just clean this up a bit before I change. If I now go to the 15-minute chart, and I want to do a DP, and I want to do a DP off that pivot. So that's a 0, 1, 2, 3 pivots back, 3 pivots back. There's the typical. And what I can do is if I go down here, zone to display, I can display the maximum only, or I can display both. Oh, that should display both. Perhaps we'll have a look at that and see whether that works or not. I'm not quite sure whether that hasn't worked, but that's what it should do. It should display both, or just the maximum, or just the typical. So we'll take a look at that. But that's available in TradingView as well, the maximum, if you wish. But I don't tend to use that a lot myself, but it's quite nice if you're a bit more experienced trader to use for a bit more of your own analysis as an area of where the market is likely to reverse if it's gone through the typical. So Dan, does that help explain that that question on the maximum? Right, well, I think sort of running out of questions now. So are there any last questions before we wrap up the webinar today? Just see where the market's opening today. So, although Friday was really quite a choppy, horrible day, wasn't it? So not Friday, yesterday. Well, Friday was as well. So yesterday, not a lot happened, but Friday, I was following this on Friday. It was really horrible. It just went sideways. So this is a good example of sometimes how the markets just don't really do what they you know, there's a really randomness in the markets. TJ asking a question. Any idea on Brexit? Well, my idea on Brexit is it's probably going to be sorted out in the next couple of days. What the UK and Europe decide, that's a good question. So you never know. By this time next week, we should know about Brexit. So I think today is the last day on the US election, isn't it? I think, is that right, that all the votes have to be finalised today, or all the court hearings have to be finalised today before the colleges actually place their votes? Is it next Monday, isn't it, the 14th? But I think today is it right that the 8th is the day where all the court cases have to be finished and the votes are basically finalised. So yeah, it's quite a big week this week if the American election is finalised and Brexit is being hopefully sorted out. So yeah, we leave the European Union at the end of December 31st, come what may. So whatever happens, TJ, the UK is out of Europe basically at the end of this month. Whether we have a deal or not, we just don't know, but we will be gone by then. And what that means, who knows? So anyway, have a good trading week, everyone. And remember to keep those losses small. That's the whole idea, not avoiding the losses. Keep the losses small. Only trade when the picture's clear. That's the whole basis of MT Predictor. That's what we're looking to do, is when the markets are choppy and horrible like it was yesterday and sometimes throughout Friday, that's the time when you should be standing aside. Interestingly, on the ES, here's an example of a VS that unfolded late on Friday that just didn't go with you. So do remember that markets will not go with you all the time. It's not about getting 100% success rate or even a high percentage success rate. It's about keeping the initial risk small when you have losing trades. So here's an example of a VS. So this is quite important, really. So it's nothing worse than, I think, gurus who show great profitable examples and just forget about trades that don't go with them or aren't very pretty or horrible. So this is a good example to finish with. There was a VS setup there where it looked like to break above that high quite nicely, but you can see it just didn't get to its target. It just did not get there. So, not all trades go with you. And it's important to understand that, this happens sometimes. Markets are horrible and choppy and sideways and random at times, and not all trade setups will go with you. This is why stop losses are important. So a good example to finish with there of a trade that I've been talking about that didn't unfold as anticipated. It's important to show those as well. So anyway, have a good trading week, everyone, and let's be back next week to see how it all goes. Hopefully we'll know Brexit by then and everything else. So keep those losses small and have a good trading week. And if there are any other questions, do drop me an email, steve@mtpredictor.com, and we'll see how we get on with answering those next week. But in the meantime, here's a last look of our add-ons for TradingView. Thanks again, everyone, and see you all next week. Oh, yeah.